Good morning.
Morning, fam. Man, we're dumping. Hey, can you hear me?
Yeah,
Okay, bet.
market's dumping, market's dumping.
Yeah, I wanted to get in right here, but I was like, man, I'm catching this at the bottom. Plus, we have this top right here, so I didn't know how we were gonna act, but we just sliced through it. Oh,
My mother just falling. Why we dumping so early?
we're having Powell speak today at 9 a.m. 1 hour from now.
Okay, yeah, I seen that.
Yeah, so market open is gonna be crazy. Man, these sales are tempting just because we've been selling all the way through.
hmm So the we didn't reach the highs of last week, bro.
Yesterday, no,
Let me see. You guys real quick.
because we were in the 964, remember? And yeah, we didn't reach it.
Am I sharing my screen?
Yeah, go for it.
You see the DXY? So I
DXY.
had to, yeah, the DXY. You see my screen?
Let me see. Hold on. Okay, hold on. Oh, I see. I see. Hold on.
All right, so I had this marked down since
Wait, give me a sec. It's not displaying your screen yet.
is it not? I swear it says you're sharing your screen. I don't know why.
It says multiple people can display their screen,
Oh, okay, okay, okay.
but give me a sec. I'm gonna stop this share because I don't know why it's not.
I think on the top it will tell you where you can choose what screen to look at, like on
Mm-hmm.
the top of the screen.
I see a screen now though.
You looking at my screen?
Yeah.
You see my markup?
Mm-hmm.
I had this markup here since last week, Sunday, I think.
Mm-hmm.
This what I thought this was what the DX wasn't gonna do, but I mean it's a little similar. I think we're finna start dumping down to these areas. So if we dump on the dollar, bro, we might be bullish on the Nasdaq, bro, to
Yeah.
come up and take these highs. You know what I'm saying?
Yeah. Um, go to the.
Look at that. We probably dumped. I don't know. if there's some positive news, we might just bounce off that 50,
And we're sitting at that 50 right now, huh?
and we might come up around this area back around here, clear out these highs. Maybe leave this one here, but probably clear out these highs. I don't know, bro. That DXY is looking pretty bearish, bro. Like it's done. I know it doesn't look exactly like my markup, bro, but it's because I thought we were gonna probably clear out this area, and the only thing we're getting to clear out is the inefficiency right here, bro.
Yeah.
Like look to the T. You know what I'm saying? Like here's the inefficiency. Like
Well,
here's a wick, and it's good morning, baby. We clear out this area, and we might just dump. You know,
we
come
can either break straight down or just
right.
continue to move sideways and eventually get that high. And that might just take a little longer, but we can still clear that high and then dump.
If we look at it on a 15 minute, watch this. We have we swept this area, pulled up this beautiful drop here, came tapped, dropping. We're probably gonna see this or this. There's still a possibility that we come down here to this gap. That's how I mark it, but for sure we might tap this right here and this
Yeah,
because the market seems like it's gonna dump, especially with these candles on the 15-minute time frame. Look at that candle on a 1 hour. I think that candle will probably suck this candle up here completely.
yeah,
But I don't know. So what I'm trying to guess, I guess what I'm trying to say is, um, potentially I could be bullish on the Nasdaq depending on the news.
yeah,
And look what I saw yesterday, bro. I clearly didn't see this yesterday, dog. Like I don't know what the hell was wrong with my eyesight yesterday.
yeah,
Look at this watch, bro. This was beautiful, bro. Like if I would have just paid attention correctly, I don't know. I was just tired, bro. Like yesterday, I was tired. Like I didn't get a good sleep, and I want to say that's probably why I didn't see it. But watch this, bro. So we had yesterday we were Asian. We had London. We broke above on New York, right? When
yeah,
I got on the computer, this is I think where we were at in this area, and then we had open open right here, and then we started pushing up, right? Open left for order block. Or nice, beautiful. Look at this. Tapped in, and we could probably aim. And I mean, we already knew because I got in on a trade around, I think up here or something, and I took a piece of this candle, but I didn't pay attention to it till the end. We're gonna aim around here for as far at least 50% of this, 50% of this candle here could have
yeah,
been a nice right there. Like somewhere around there, the 50% of the inefficiency. Normally, it fills up 50% of it. not all the time does it fit it completely. But then that shit was sweet, bro. It just I just didn't see it yesterday. I don't know why. I went back to review the day yesterday. I'm like, man, there was something wrong yesterday. I didn't see something. I felt bad about yesterday. Uh,
Yeah,
not satisfied. You feel me?
yeah.
So I was like, there was something I just didn't see, and I came to look at it, and I'm like, damn, look at that. That shit was right there. Like as soon as it opened, it gave you a way to get in. As soon as it opened, a few panels after, there was a beautiful entry, and I think a few people went in there. I don't know if Lou might have took a trade around that time.
I think Lou had a winner day yesterday. Yeah, so
Yeah,
he got several scalps. I think.
yeah, but if you'd have held that, let's say you'd have got in on this candle here, you'd have held that at least to this little doji right here.
Yeah,
Yeah, it would have been sweet from here to here. That'd have been a sweet spot because that's around the 50% of that inefficiency. You know, I definitely didn't think we were gonna go up here, but that push here, it was nice. It was nice. Definitely, it was a nice push.
that would have been a big day for sure.
Yeah, yeah, it would have been nice. Bro. Right now, we're just looking at today. Hopefully today, because if you look at today, we got that. What is it? The market maker model, bro. Right here, we got the high. We hit the start of it. The high. Now we're gonna end up somewhere down here, somewhere in these areas. Maybe lower. If I mean, if news are negative, but if not, then we probably come up and
Take the high.
hit this. Yeah, hit the high and then see what happens from there.
Man, market open is gonna be interesting.
Yeah, definitely, bro. I got my little. Oh, and Trump speaking too. They didn't have that yesterday. I think they just added this.
Yeah, I think they did because Michael, I think he just posted a screenshot earlier. Yeah, he posted a screenshot earlier and it wasn't there then.
Mm. Yeah, yeah, it wasn't there. I was looking at this yesterday, and
Yeah.
I seen Powell, but I didn't see Trump.
Well, Michael posted a screenshot at 7 in the morning this morning, and it wasn't there. So that just got added like within the last hour.
Yeah, that's crazy, bro.
You you
There's gonna be something.
you can leave your screen share if you like.
All right.
With still bearish.
Let me fix my my thing, my charge phone. trying to edit my favorite toolbar on my top steps thing.
I need to buy real quick, see what they're trying to do.
Yeah, we Abram. I ain't gonna lie, but we might be bullish today, bro. Depending on the news, we might. There's a few things that might kind of just. They don't tell me that we're gonna be bullish, but it's a few things that look possible.
Yeah.
Possible, bro. Hmm.
Morning, Charles. Hey, let's get it.
Hey, good morning. Good morning. What's going on? What's going on, people?
Morning, fam. How you doing?
Good morning,
Good,
y'all.
bro. Just chilling, man. How y'all doing? Super well.
Man, that's gonna be a crazy one today.
Yeah, it should be. It should be. Should be. That man speaking in like 40 minutes. So, you
And
already
and
know.
and then to top it off, Trump speaking too.
Oh, dang. Let me pull up that
Are we
Trump
sh-
stuff.
are we streaming, bro?
Yeah, we live.
We can't put like the news and none of that, right, on YouTube.
No, it shouldn't be a problem.
Would you say you can't do what?
Like I was gonna search for Powell speaking, bro. We're just gonna see.
Oh, yeah. I mean, that comes in like 10 minutes. I think we can do that.
Okay, okay,
Yeah, we
okay.
can do it. Oh no, Ricky.
Where is the.
Um, yeah, there shouldn't be a problem. We are live on YouTube.
Okay, okay.
Oh, I just got sidetracked. They're doing with that Trump schedule. Let's see.
So Michael
Trump's schedule.
Michael posted a screenshot, and on the screenshot it wasn't there, but fam Martin, he just looked at it not too long ago, and he's like, "Oh shit, I didn't see the Trump." And so they added the Trump like not too long ago. That was like last minute news type of thing.
Yeah, I got. I have a list of. I'll send y'all the website. It's Trump's public schedule.
Mm-hmm.
It updates every midnight, or when pushed out via social media, whichever's earlier. So what time does it say he's speaking?
Right at the same time as Powell.
Well, yeah, at the same time, right, as Powell at 9, it's gonna be crazy.
Same
Yeah.
time. It's
We got
at 9.
this at 9. Yeah.
Oh, y'all speaking y'all time zone.
Oh,
Yeah.
10. Wait,
All right. I'm like,
New
what?
York time,
Well,
10 a.m.
yeah, I don't know if they have the time for his thing because this. So we'll
It
see.
says 10 to
This is all Eastern.
10 to.
Yeah,
Basically
yeah. I don't think it means it's that time.
30 minutes from now.
Yeah, yeah. I know he has a president. The president greets the King of Jordan and the Crown Prince of Jordan. That's at 11 something. Okay. Well, yeah, that means I'm light on the wrist today. Shit.
Yeah, market open in 5.
Yep. Let's get it.
I'm currently in a buy right now. Just looks like we're starting to bounce, so we'll see what it does.
Yeah, we're gonna see. But yeah, this is roll call fact based website. It says we got in town pool call time. I don't know. I don't even know what that means. That's at 9 a.m. But this has nothing about a speech. But I guess we'll see. We will see if this updates. But until I get that real information, I'm gonna say it is as Trump is speaking at 10, since that's what y'all said. So that's what we're doing.
Morning, family.
Morning. Is it Trump at 10 or Papa Powell?
Both.
It's Powell here, pal.
Yeah, it's Powell is confirmed, it looks like, but Trump
might
not
be.
sure of the time. But
Abuelito Powell.
Give us our money.
yeah,
Right?
yeah.
4 minutes. We're on to ya.
I have no idea. We got 2 minutes.
I low key am starting to hate trading view.
Why?
Bro,
What did you
I was just up my 110 right now on this move.
Yeah.
And by the time I hit X, it went from 110 to 50.
Ah.
Oh damn.
And I was like, let me go check Tradeovate. Let me go check Tradeovate. You ever seen it when you close out a position, it like fades and then
Yeah.
closes? Man, I look at Tradeovate, $50. Fucking
Damn.
hell. I've been holding that since 9/10.
Wait, y'all be closing? Y'all be market closing?
Yeah, I do when
Yep.
it doesn't hit TP. When it's not like it's fucking around, I'll just close it.
Oh, okay.
During Asia, that's the worst thing to do.
Yeah, I just be bringing my target up or down.
I caught the bottom though.
Yeah, good shit.
I had longs at 673.
There you go.
Held those. And now watch this. It's gonna push up now.
30 seconds.
100% we're gonna push. Uh-huh. Fuck your mother. Oh my god. Wow.
There you go. 15. 15 of them guys.
I'm gonna go cry somewhere. 400 to pass this last eval.
Go.
Nice.
Oh, goodness, that's some kind of price action. Told you. Right, 721. Bing bong.
Oh,
Fucking crazy, bro.
I closed my position.
Good. We might push to about 734, 733. We got that no topside wick at 8:20 a.m. 5-minute candle, so I might try to take that out.
Now,
You see that candle with no topside wick? Those two candles actually.
oh, right here, yeah.
At 8:15, 8:20.
Oh, that's Martin's screen. Martin's currently sharing right now. I
Who's sharing?
That's Martin.
Oh yeah. We're gonna take out these two candles.
Yeah, I took profit at 728.
Good shit. Take out the 733. Boom, there's 733.
There you go.
Next one, 741. Dang. Take out 41. Yeah, 41. Give it to us.
Let's go. That's the balls pattern.
There's your 41.
Mm-hmm.
We went from soft.
We'll go cry somewhere real quick.
Hey, that's a beautiful market open.
Beautiful move.
First. Yeah, but he gets the pullback. 3 minutes, 70 points.
Ooh, dang! I'm punching the air right now.
Bro, I already knocked the air out and choked it out.
Bro, it already done 3 times from where I
I know.
exited.
I was in buys at 697 the second time.
But I'm punching myself in the face right now.
I said
That's a
was gonna be
dumbass candle.
bullish, huh?
Low key, that's a dumb. I guess that candle's fucking stupid.
Right there.
Oh, chi.
Well.
young rip.
But that pullback,
Kind of short.
damn, bro, what is that? That's it. That,
Yesterday we had the shittiest price action, and then we get this today. Hey, that was clean.
That little meme and go, Jesus Christ.
she never gonna give me my pullback. He said we don't got no time. We're going up.
I wonder if I can trade
Then we
with
went up above London High already. Or no, we're right
Damn,
on it.
big bus.
You know.
Yeah.
Yeesh.
Bro, I need to get them to have of leaving them runners. I'm sick to my stomach right now. Hey, it's a good day though. It's a win. It's a win. Shoot. If it was a loss, I'd be crying right now.
Oh yeah, we're way above it. We
Watch
should
out
we
for
should we
me.
should pull back now.
Hmm. Hmm.
Are we gonna YOLO when Paul's speaking?
Damn. Hmm.
Yeah, I trade one micro when he talks. One micro with the 1 point stop loss.
Leave one for a buy, one for a sell on a different account.
Hmm.
Alright, we'll come back when this guy's finished speaking. That is the best way to pass some evals, though, if you think about it. Like those $15 evals. Shoot, why not?
Order submitted. Aldo, do anything.
Who that?
Got some algos going.
Hey, let's go. Let's get it.
It looks like they need, what's the target on these? 73.75?
Well, good Lord.
Let me do a
Oh.
wellness check on Jasmine.
Hmm. Yeah. Order filled. Those are hit just hit targets. Wait, there's one more order. Order filled. I hit a target.
Go.
Whoa, starting to go off. What a morning. Mm.
You got on that cell, though?
What is that?
You got on that cell?
No, my hours went long. And already hit target.
But
Yeah.
man, them algos are cold, bro.
Yeah. I got a couple going. Um, yeah, I got three of them running. Um, two of them are up 434 and another one's up 100.
Oh shoot!
So
So remember when you said you want to go full automated?
yeah.
Once you go full automated, how will it determine the bias? How do you go about it? Using the APR?
Yeah, so it's still my bias,
Mm-hmm.
but it's just
Correct.
yeah, it'll adjust with the ATR, it'll adjust with volume, you know,
Yeah.
things like that. Like if the market is in an expansion if it's in an expansionary mode, like where the ATR is getting higher, it'll go for more ticks. If
Okay.
the market's saying, all right, we're contracting a little bit, then it'll go for less ticks. And then it'll also like add break evens and add some trails and whatnot. Like even just now, it does it on the ES. It's a little bit more difficult to do fully automated with NQ just because it's so sporadic. But with ES is clean, it's easy because it's just so much more liquidity.
That makes sense. What do you use to measure? How do I say it? Like the volume in the market. Do you use something to measure that volume? Where okay, like if, let's say if there's an expansion, something tells it, okay, we're having an expansion. Oh, we're moving sideways. We're you know what I mean?
It's just the volume, just
Just
the volume, like the volume indicator.
oh, okay,
It's literally just data from CME.
mhm.
Like when you get in, like at the open, you'll see a volume spike. Like even hold on a second, put it on my hand. Even at 9:30, there was 36,245 contracts that had buy volume at 9:30. So market just that's why it went long.
Yeah.
And so if you, I mean that's pretty much it's pretty much it. It's pretty simple because I know a lot of people have algos that are kind of uh I would say it's really complicated, but this one is pretty simple. It's volume and ATR based, and it just goes with it.
Hey, that's tight.
Yeah, bro. Yes, sir. But I'm still refining things, still seeing what's happening.
For sure.
I
Well,
mean, I look at the data. I always look at the data on the weekend to see like, all right, where should stop losses be? You know what I mean?
yeah, but your growth on it, the way that you're going, it's so exponential. Like you're going light years. You know what I mean?
Yeah, I'm trying.
Hey, you got this.
Also, too, I'm seeing that Trump is speaking at 2:03 p.m. By the way,
Okay, so it's no longer at 10 or whatever it was.
yeah, it's not at 10. It's at 2. But yeah, no, it's all like it's all been trial and error. Like accounts still can't get blown with them shits, shit like that. So
Right.
it's just one more thing to just take away the 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 emotions out of it or limit them because the decision if you've already made a decision about how you're gonna trade, then pick the trade. You know what I mean? And this just does that. It takes the trade. You come up with a thesis, it takes the trade.
Yeah.
No emo puts the target here, puts the stop here. It's like a rule. It's rule based. So that's it.
I need to work on my, putting stop loss into profit, let security two, let one run. That's what I need to work on.
Yeah, because I mean, it's all about having a profit taking system. Because if you don't have a profit taking system, then you'll always something that you don't want will always happen, because you gotta like, you can be in profit, but if you don't have a systematic way of taking profit, whether that's a tick based, whether that's a chart based decision making, like if you don't have a way of actually taking profits, then eventually you won't take profit.
Yeah, yeah,
So
yeah.
you can be up in a trade $1,000, but if in your mind, if it's not, hey, if I'm up 1,500, I'm taking profit. If you don't have a rule, or I'm taking 80% off here, and then I'm gonna let the rest run, trail this amount by X, do this, or whatever the case is. If you don't have that profit taking system, FOMO and greed will kick in more than it normally would have.
Yeah. Plus, once it reaches X point, it automatically goes to break even. So that's a risk free completely.
There you go. Yep. And then trading with prop firms and then trading live capital is so different also, in
Yeah.
terms of like really wanting to capture a full move versus going into your trailing drawdown versus having an account where end of day draw, like it's yeah, it's very tricky. But
Yeah, because with that drawdown, there's only so much that I can take, and if it's moving up and down, it's things like
exactly.
that.
Exactly. Yep. So that's how it is. That's what it is. I know that boy's speaking in 13 minutes.
Ooh, what you thinking, Mark? You waiting for a breakout?
Yeah, what y'all thinking?
I think we should gonna keep going higher, bro. So I like this to me looks like a pullback. I really want this to come down to this area here and then fly up. So if y'all looking at the screen, this is a demo account. I'm just bullshitting with it, but realistically, what I'm waiting for is for price to pull down here to keep going back up and take out this high here, this high
Mm,
here, or
what do you
maybe close up this area here.
what what is your entry price set at? When are you gonna get in?
If because hold on, let me see the on the top
Oh
step
wait,
because
you're in now.
well no, this is just the demo. This is demo.
Oh, okay,
You're
okay.
looking at a demo screen now. My entry realistically should be around 21,763
Mm-hmm.
around there. If it pulls back down towards that zone, that's what I'm looking at to enter. But it's just like I said, it's just like a little mental because I see a pullback and it looks like it's gonna start consolidating for a bit, and
Oh,
then we want to see sweeps. We want to see market sweep up, sweep down, and then potentially just keep going up. So we're gonna sweep the tops, then we're gonna sweep the bottoms, and then push up. That's what I'm looking at. But I don't know. It all depends on the news. What happens?
on that
But
seven.
so far, I've been correct as far as coming back up. That's what I said earlier. I told Sergio like I think we're gonna come down, push up.
Bro,
Um,
you had that on the money.
yeah. Yeah. So far, because we open on midnight open, we open with a bullish candle,
Mm-hmm.
and we came back down here. We didn't. You see how right? So this is midnight. We didn't push above it. We came back down here
Yep.
and we closed out this area. I was like, all right, so I don't think we're gonna go lower. I think we're gonna push probably to these highs. Um, I'm not 100% sure, but I'm thinking we're sweeping. It's a beautiful trade, but I think we're gonna sweep Monday and maybe Friday. depending on the news, right? Because if it's high impact, it could one candle could just be like all the way up here.
Yeah.
You know, so I don't know, bro, but for sure I'm bullish. For sure,
Bro, yo,
I'm
you know what's
picking
so
bullish.
funny? I'm looking at your chart because you wrote Moon Day, so I'm thinking
Uh,
like, what is Moon? But
oh,
I realize now it's Monday.
yeah, Monday.
I
I got Thor's
was like, yo, I
high.
had never heard of Moon Day.
This one I forgot to put
That's hilarious.
is freeze. Yeah, freeze low, Thor's high, Wooden's high, Tweed's high, and Moon. Yeah, Moon. So I got my highs marked up, my
Okay.
lows of the day.
Where you? So you just put like nicknames on them.
The Norse god, the Norse gods names. Yeah.
Gotcha. That's fire.
So this is
Because I'm like, yo, what is? I'm trying to figure out what Moon.
yeah. Oh, all right. So moon is
But you
just the
just said
moon,
it.
like the moon, like the moon, like the moon. Sunday I don't mark it, but sun is the sun. Frigg is Odin's wife. Thor is the god of thunder. Woden is a Germanic goddess. Pretty much Odin. Tweeds is a god of war. Uh, a Norse mythology god of war, and that's it.
Hey, that's not.
And put little nicknames on them real quick, you know.
Mhm.
So, but that yeah, that's what I'm waiting for. I'm waiting for this to push down here. It might not even, bro. It might just from
That
here just keep going.
that
I'm
Yeah.
that
not.
candle that you're looking at is 23 on fibs as well.
Look, we have a beautiful uh area where price couldn't push up, came back down, pushed higher.
Yep.
So it's sitting on this area. It could just go up from here, but I don't know. I'm not even going to trip on it either. Like miss out on it because,
Good morning.
like I said, that could just
Morning,
be
guys.
sweeps.
Hey, what up, Jets?
Morning, everyone.
Grand Rising. Grand Rising. Someone on, man. Hey.
Ooh, news here shortly.
8 minutes.
You know what? Time to play with that demo.
Yeah, I gotta see specific setups, bro. I'd rather miss out on a day of trading than not see the setup that I want
Yeah,
because
especially on days like
then
this.
I'm gonna just be chasing, bro, and I don't want to chase. If
That
I chase, I'm gonna end up losing.
that's what I was scared of doing yesterday. I seen several moves where I was like, okay, I'm gonna go ahead and enter, and I just fell back. You feel me? I fell
Yeah,
back.
like remember I was telling you like yesterday I was just tired, but when I got on the market, we already had this move, and then right here on open, that's where we left that beautiful area where price came back just to tap in right here, bro.
Mhm.
That was an entry right there, right here.
Yesterday, I took a loss, and then right when we got off, right before we got off, I had to enter a sell, and shortly after, maybe like 30 minutes after it hit, so I ended up breaking even for the day. Well, I ended up with 20 profit, but I guess profit's profit too.
Yeah, profit's profit, yeah, of course, but you know we're here to train your eyes to see what
Yeah, I
for it
need
to happen. What you as far as what you got planned out.
I need to work on the system. That way, they automatically going to like break even after it hits a certain point. Then it'll be a risk free, and probably like some partials or something along those lines.
Hell yeah. You see how you look like it was gonna keep going up? Like
Yeah,
it went up, down. It didn't clear this high here, came down, cleared the high, and now it's gonna come down. Hopefully clear this low and then tap into here and I could just get in for a push. So this is what I'm actually waiting for. I have my stops below here, and then here's my actual target. But I'm bullish, bro. I'm bullish. This doesn't look to me doesn't look like a bearish market. We're gonna see sweeps. So we swept the highs. Now we're gonna sweep the lows. Hopefully, sweep the lows. And then we got this little trend here. I don't know how low we could probably go. We might be able to go a little lower. No. Oh, we got 5 minutes for
5 minutes.
5 minutes for that news.
Papa Pow. Oh, look, little head and shoulders right there too.
Mhm.
What you thinking, Mike?
To be honest, maybe we have a large bullish candle at open. We created a bunch of liquidity all night. Since midnight, we've been just dropping since midnight. Chart, let's see. Jump to a 1 hour. We're just in this massive range. It's like a 600-point range. I mean, I would like to see a push up to 22,108. That's like long-term goal, big crazy day goal, or bullish week goal. I just want to see this massive hourly and 4-hour imbalance finally be closed from that
Oh, the big drop.
crazy fall. Yeah.
Yeah.
I mean, we're holding these levels on a bigger time frame. Massive rising wedge. If you look at patterns, we're getting higher lows, equal highs. But the uncertainty is with all these tariffs that Trump keeps throwing out, just like last time Powell said, he's just being cautious. He's not sure if he's going to hold rate cuts.
Yeah, it makes it a little harder to speculate.
Yeah, I mean, if Powell's erring on the side of caution, even that means he's unsure of what the tariffs are going to do to us. Because he could open his mouth right now, and this big ass 1 hour candle we have could just straight wick.
True.
All of it just fall straight down.
We did that a few days ago, I think, didn't we?
Yeah, we pushed up and then just dumped. Oh, that was Friday.
Yeah, Friday. Yeah.
Friday, we pushed hard and then just fell. Let's see.
Oh, man.
But I mean, that's what I see right now. To be honest, we're just getting lower highs, hourly and 4 hour. We're getting higher lows, equal highs, rising wedge, whatever you want to call it.
20 seconds.
Is that jazz?
Hey, Daz.
We got 20 seconds. Let's
I'm
get
not on the. I'm not trading, but I'm watching.
Came out.
You not
I'm
trading?
outside.
Jazz,
No,
what you say? You said you not trading?
Nope. Traumatized.
Damn.
Just kidding. I'm driving. Probably
Yeah,
next
that
week
sounds
I'll be
good.
back.
For
All
sure.
right, time to talk. Good morning, everybody. Phew.
Good morning. Damn, already?
Hey,
God damn.
Hey,
Yeah,
do the cops.
We was joking, but god
there's
damn.
14.
Hey, do the cops on the mic.
That shit's funny. Good
It's a
morning.
1 hour tap.
Oh. Funny shit, man. Funny shit.
Is anybody watching it? Let's see if I can get
Entry,
it.
baby, entry.
I sent the link in the chat straight from the Senate.
My entry got clicked, y'all. Right there, right there. Boom. We're going
Check back
up.
the live video of this hearing. It's not. I get the video's not up yet.
Oh, he's not talking yet.
Well, I don't know.
Revenge trading, not being able to take profits when they have. It's all over the place. But the main thing.
Let me see.
This is current.
Do you hear that?
There we go. Where is the? Yeah, it's still not on yet. Just waiting.
Yeah, they're just taking a bunch of pictures right now of homegirl. Yeah, I see Pelosi's up 100%.
Yeah, she chilling. Man, she a beast. Funny thing is,
Can y'all hear it?
she's not even the best trader there. That's the crazy part.
She don't even trade. Can y'all hear it?
What is that?
Yeah.
Yeah, she's not even the best trader in Congress, which would be crazy.
So it's like, y'all remember how many days is before they have to legally report what they got into?
It's like between. I'm mixing this up between the hedge funds, between like 60 and 90 or 180 or something.
Right. So I was thinking, a lot of the times that the info that they got, it already played out by the time that they're reporting it.
For sure.
Yeah. And
Yeah.
I seen all these websites. Oh, copy Pelosi's trades, but I mean, like, it already played
Yeah.
out when you're.
She been did it. Yeah. By the time you find out, she already up 60, 80%, 100%, and exiting.
And take profit. That's right. I was
Yeah.
telling that to somebody. I'm like, bro, they said, man, I'm trying to follow Pelosi's trades. I'm like, I don't know if that's a good idea, yo. By the time that they report it, it's old news.
Right. Powell tells Congress that the Fed is in no hurry to lower interest rates further. Yeah, it doesn't come back on here. They don't have the live feed. Oh, it is
30 MRAs and
It is live.
30 MRAs and MRIAs that never had timely action at SVB. How can the people who are supposed to be our cops on the beat have not faced any recourse for such egregious failures? I simply don't understand. We must all address the fact that over the last 4 years, the Biden administration and Bidenomics have devastated, decimated, and destroyed our working families' ability to support themselves. During Joe Biden's time in office, overall prices rose by over 20%. Energy prices, 34%. Transportation costs, 31%.
Is that Paul speaking right now?
Groceries,
No, that's
52%.
Tim Scott.
But that's not all. Thanks to Bidenomics,
Who?
2/3
Tim
of
Scott?
Americans have less than $1,000.
That boy Scott speaking.
Less than $1,000 in their savings accounts. But there is good news. Things are going to get better.
Yeah.
During his first term,
He's a senator from
President
South
Trump kept
Carolina.
his promises to the American people. In the first 3 years of his presidency, President Trump built the most inclusive economy ever. 7 million jobs created, and 2/3 went to women, African Americans, and Hispanics. It's time to once again make America's economy work for the folks working paycheck to paycheck. Joe Biden broke our economy, and Donald Trump will fix it. For too long, bank regulators have followed a black box regulatory framework with little to no recourse. The FDIC, under President Trump's leadership, recently released never-before-seen supervisory documents which confirmed that Biden's Operation Choke Point 2.0 was real, despite assurances that these unacceptable practices would end following the Democrats' first Operation Choke Point 1.0. We are seeing an unfair playing field that results in disastrous consequences for legal businesses and law-abiding citizens. On one hand, if you were in the private sector and you do your job poorly, you would face consequences, reprimands, suspensions, or even being fired. But if you are within the walls of the federal government, such as a bank regulator, you will face no consequences for your actions, even if you pressure a bank to cut off services to digital asset firms, political figures, and conservative aligned businesses and individuals. To me, that goes against the principles of fairness and market access. Over the last 2 years, as the ranking member of this committee, I have consistently argued that Basel III endgame proposal will raise costs and limit credit access for hardworking Americans. And while I'm glad this proposal was not finalized, the uncertainty surrounding Basel III forced banks to put capital on the sidelines, limiting access to that capital for local small businesses across our country. Now, as chairman, I plan to work to rectify the issues for the Biden administration. Chairman Powell, I look forward to hearing from you on the Federal Reserve's future and the plans that you have for right sizing the financial regulatory framework, specifically around Basel III. To create jobs here in America, we need to make sure there's capital and liquidity in the market. And we also want all Americans, even those growing up in poverty like I did, to know that they can access the capital necessary to start new businesses, grow existing businesses, buy a home, and pursue their American dream. Chairman, I look forward to your comments and your testimony. I would simply say that I believe that weaponizing an independent agency like the Fed for liberal positions, from debanking crypto, bank stress tests, and the green financing scheme is not calling balls and strikes as a fair referee. And I hope that we are getting ready to clean that slate, start afresh, and focus on a healthy economy. Ranking Member Warren.
Thank you, Mr. Chairman. Chair Powell, it is no
Oh my
secret
God.
that you and I disagree on the need for strong bank regulation, on monetary policy, and on the Fed's stock trading scandals. We have sharp differences, but I believe you are a principled public servant who cares about this country. We are at an unprecedented moment. Our financial systems are facing huge risks from the economic chaos of President Trump and his co-president, Elon Musk. From on-again, off-again tariffs to on-again, off-again layoffs for tens of thousands of government workers, to on-again, off-again cuts in domestic grain purchases, to on-again, off-again support for medical research. Now, co-president Musk and his OMB director have frozen all work at the Consumer Financial Protection Bureau. There are now 0 cops overseeing the $18 trillion consumer lending market. 0 cops. Investigations into illegal foreclosures and auto repossessions canceled. Exams of giant credit card issuers to weed out unlawful junk fees canceled. Probes of illegal debt collection practices canceled. Rules to save people billions of dollars canceled. If Musk and his OMB directors succeed in killing the CFPB, it's like putting a sign on every checking account, every credit card, every mortgage application, and every car loan. Cops have been fired. Let the scams begin. That is not all. Musk and his Doge crew are also rooting through the Treasury's most important payment system, the financial plumbing that ensures that billions of payments go through, from Social Security checks to grants for community health centers. No one has verified how they got this access or what they are doing. No one has checked whether Americans' financial data has been copied or sold for the personal profit of Mr. Musk. Instead, we've had a series of misleading and conflicting statements by Treasury Secretary Bessent. After receiving public blowback, it appears that Secretary Bessent is now trying to throw the Federal Reserve under the bus. Secretary Bessent claims that Doge can't meddle with the Treasury's payment systems because ultimately the Fed is in control. Now, I'm not sure whether Secretary Bessent doesn't understand how the system works or if he's just trying to shift the blame to you. But I know he is wrong. The Fed simply executes the transactions that Treasury instructs. If Elon and his hackers, for example, initiate instructions to choke off payments to their enemies, or if they issue instructions to shut down payment for teachers' aides for kids with special needs, the Fed may have no way of knowing that the instructions were manipulated, and the Fed may have no legal method to override them. Chair Powell, the next 18 months may define the legacy and the country's trust in the Fed as an institution. I expect that you will work with Democrats and Republicans and Congress if Doge's next move is to try to commandeer the Fed's payment system. I also expect that you will not join the conspiracy to shutter the CFTC. Unlike the Treasury payment instructions, you can see if the CFPB's funding requests have been manipulated. I understand that some extremists have a different view about what the law ought to be, but under the law right now, impoundment is clearly illegal. Do not make the Federal Reserve an accomplice to this illegal act and forever sully the reputation of the Fed. Keep the CFPB funded exactly as the law requires. We are in the middle of a crisis as Elon Musk tries to take over our government. But let's also talk for just a minute about your day-to-day job, meeting the Fed's dual mandate of promoting maximum employment and stable prices. It's now clear that the Fed acted too late and let inflation get too high, and then responded by keeping rates too high for too long. These policies made the big drivers of inflation, like housing costs, even worse. And they put Americans' jobs at risk, making it more difficult for them to afford a home and for small businesses to be able to finance their operations. I urge you to move more rapidly to bring down interest rates, beginning with a meaningful rate cut next month. You have proven you can move quickly when it is politically expedient. After President Trump was elected, within the space of just a few weeks, you scrubbed seemingly all mention of diversity and inclusion from the Fed's website. You withdrew from an international central bank group that shares information on climate-related risks to the financial system. You instituted a hiring freeze that will limit the number of cops on the Wall Street beat, and you announced plans to conduct big bank stress tests. I can see the immediate political appeal of your strategy, but ultimately it will fail. You will lose with people. Climate catastrophes will continue to mount, and the increasing vulnerability of big banks will threaten our entire economy. Sure, Donald Trump may be happier with you right now, but reading deeper into politics to please him over the long run will burn the reputation and the independence of the Fed and put our entire I urge you to vote. Thank you, Mr. Chairman.
They will hear from the chair of the Federal Reserve on the semi-annual monetary policy report of Congress. Oh, thank you for your testimony today. And you are now recognized. Chairman Scott, ranking number one, and appreciate the opportunity to present the Federal Reserve's standard on the Federal Reserve remains squarely focused on our dual mandate goal, maximum employment, and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our
I think
goals.
he says the same
over
thing
past
every
few
time.
years.
Every time.
Labor market conditions have
2%.
cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer run goal, though it remains somewhat elevated. We are attentive to the risks on both sides of our mandate. I will review the current economic situation before turning to monetary policy. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose 2.5% in 2024, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have declined in the fourth quarter, but was solid for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid and appear to have stabilized. Payroll job gains averaged 189,000 per month over the past 4 months. Following earlier increases, the unemployment rate has been steady now since the middle of last year, and at 4% in January remains low. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. The strong labor market conditions in recent years have helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer-term goal. PCE prices rose 2.6% over the 12 months ending in December, and excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys, households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. Since last September, the FOMC lowered the policy rate by a full percentage point from its peak, after having maintained the target range for the federal funds rate at 5.25% to 5.5% for 14 months. That recalibration of our policy stance was appropriate in light of the progress on inflation and the cooling in the labor market. Meanwhile, we've continued to reduce our securities holdings. With our policy stance now significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the FOMC will assess incoming data, the evolving outlook, and the balance of risks. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. We are attentive to the risks on both sides of our dual mandate, and policy is well positioned to deal with the risks and uncertainties that we face. This year, we are conducting the second periodic review of our monetary policy strategy, tools, and communications, the framework used to pursue our congressionally mandated goals.
The focus of this review is on the FOMC's state and underlying goals and monetary policy. Policy unification. The 2% longer inflation goal will be retained and will not be a focus. Our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. We will take on board lessons of the past 5 years and adapt our approach where appropriate to best serve the American people to whom we are accountable. We intend to wrap up the review by late summer. Let me conclude by emphasizing that at the Fed, we'll do everything we can to achieve our dual mandate goals that Congress has set for monetary policy. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. Thank you. I look forward to your questions.
Thank you, Chair Powell. Certainly your words and your actions have a global impact. You have the opportunity and responsibility of leading this country in the right direction economically, and I thank you for your commitment to having a conversation with all of us about how you do that well. You and I had a conversation yesterday, some of it was frustrating, some of it was illuminating, but in the end, my goal is to make sure that the American people, working paycheck to paycheck, have more opportunities to succeed, not fewer. You have said that the Fed is not against innovation, and banks are perfectly able to serve crypto customers as long as they understand and can manage the risks. Yet you have admitted that the threshold has been a little higher for banks engaging in crypto activities. Last week, I held a hearing on debanking and once again heard that federal banking agencies, in particular the Fed, use reputational risk as a tool to encourage the debanking of certain legal industries and law-abiding citizens for political reasons not tied to safety and soundness. Debanking is a top priority for this committee, and it certainly is for me, and one that I believe is a bipartisan issue. Will you commit to working with this committee to end debanking, including working with the new Vice Chair of Supervision, once appointed, to revise the Federal Reserve supervision manuals to remove reputational risk as a tool to weigh in on political topics?
I'm happy to make that commitment.
Thank you, sir. Accountability is very important. I would like to think accountability is a priority for everyone, especially the Fed, given that failures in Fed supervision can result in the loss of billions of dollars. Yet following the failure of the Silicon Valley Bank, which was in part due to the failures of its regulators to identify egregious mismanagement of interest rate and liquidity risks, we have yet to see any regulators be held accountable. And as you saw, that was the point of my frustration, that as a guy who spent a lot of time in the private sector, 15 years running businesses, I can tell you that accountability is a necessary part of making the entire organization healthier and perform its job as well as possible. I'm encouraged that the FDIC has begun the process of holding SVB executives accountable. That's good news. But no Fed employee has been fired, put on probation, put on performance improvement plan, all of which would be expected in the private sectors I just mentioned for employee failure. Please explain to me why Fed employees are held to a different standard from my perspective than everyone else, and what are you planning to do to take accountability for Fed failures in supervision?
We've actually done quite a lot in response to the events associated with Silicon Valley Bank. So we've done many, many things. In terms of specific accountability, what we found was this was not a case of malfeasance or nonfeasance so much. It was a case of people were carrying out a specific playbook that failed to cause us to act in time for these things. So it wasn't actually particularly fair to the employees to say you violated our practices in some way. That wasn't really what happened. What happened was, I would say, a lot of focus on process and on governance and control, and not enough focus on basic bread and butter banking, credit risk, liquidity risk, interest rate risk, things like that. So as we discussed yesterday, we took very substantial steps to avoid further spread of those issues, and that was successful. But I understand your point on accountability.
This is one of the areas where you see the approach to looking at safety and soundness, and the number of MRAs that weren't really documented, but no action was taken. That leads me to the conclusion that individual employees, supervisors, should have been held accountable for that. I'll move on though. In the past, you've supported tailoring regulations so that we ensure banks of different sizes thrive and preserve our diverse banking system. Will you commit to working with me as chairman to make sure that financial regulations do not impose more burden than is necessary? I'll say that this comes after a number of conversations with community banks and regional banks that have continued to stress that the cost of the regulatory framework around them isn't just harsh, it's oppressive. Larger banks suggest that the cost per employee for the regulatory framework is $10,000 per employee. I think we can do better, and we'd love to hear your thoughts on that.
First of all, I will commit to working with you on that. We do try to avoid an excessive burden. I think it's fair to take a fresh look on, frankly, on debanking. I think we all see, both on in your hearing and in the one on the House side, we hear a lot of people talking about that. And, it's time to take a fresh look. I think we don't intentionally do these things, but sometimes regulation leads things to happen. We need to do work.
I appreciate that. The ranking member, I'll say this. After having a number of conversations with CEOs and banks around the country, one of the things that was made clear to me was the specific statement from these CEOs that the regulatory OCC and other regulatory agencies is specifically to debank certain industries. And that is I think we have to solve. It's legal in America to do business. We should do our part to make sure that they're banked.
Thank you, Mr. Chairman. So over the weekend, Co-President Musk and Acting Director Vogt effectively shut down CFPB. No more cop on the beat looking out for a family of four in South Carolina facing an illegal foreclosure. No more cop on the beat looking out for your grandma whose bank account has just been taken over by a scammer. No more cop on the beat looking out for people getting ripped off by giant credit card companies that are charging illegal junk fees. It also means that the CFPB is no longer doing one of its most important jobs, examining big banks to root out illegal conduct before it happens, or at least stop it before more people get hurt. Chair Powell, if the CFPB isn't on the job right now, then who is administering JP Morgan or Wells Fargo's consumer compliance exams to ensure that they are following the law?
Senator, I believe that you would know that Dodd-Frank moved all authority for examinations in the consumer space to the CFPB. We still have some jurisdiction.
We'll talk about that in a sec. The answer to my question, please. If the CFPB is not there examining these giant banks to make sure they are following the laws on not cheating consumers, who is doing that job?
I can say no other federal regulator.
No one, in other words. So thanks to Co-President Musk and CFPB Acting Director Vogt, Wall Street banks no longer have to show the bank examiners that they're not illegally opening accounts people didn't ask for, like happened with Wells Fargo, or charging illegal junk fees like the Bank of America did. But CFPB has jurisdiction only on banks that have more than $10 billion in assets. So what's happening in thousands of community banks all around the country, those that have less than $10 billion in assets? So Chair Powell, as you know, the Fed oversees consumer compliance for state member banks that have less than $10 billion in assets. Has the Fed suspended consumer compliance exams for those smaller banks, or is the Fed still on the job to make sure that those smaller banks are following consumer financial laws?
Still on the job, business as usual.
All right. By forcing the CFPB not to do its job, President Trump Elon Musk and the author of Project 2025, Russ Vought, are giving Wall Street banks an unlimited get out of jail free card so they can cheat working families, even while community banks continue to play by the rules. Project 2025, Russ Vought. For any Americans who have money deposited at JP Morgan or Wells Fargo or any other of the giant banks, they should now know that there is no one on the job to make sure that those banks are not scamming you. Only the smaller banks now have a cop on the beat to make sure that they aren't cheating consumers. You know, if I have my money in one of those giant banks, I might think about going to a smaller bank where the protection, at least right now, is a whole lot better. Now, at the same time that the CFPB is under attack, the Fed is buckling to pressure from Wall Street to erase other safeguards for the too big to fail banks. During the first Trump administration, under your leadership, the Fed weakened the big bank stress test, including by giving the big banks some of the answers to the test in advance. I called you out on it, but you promised right here in this committee that you would not give those banks the whole answer key. I'm going to quote you back. You said, complete knowledge of the models could lead to a model monoculture in which all firms have similar internal stress testing models, which could increase the correlation of risk in the system and miss key idiosyncratic risks faced by the firms.
Opening gap was just filled.
But several weeks
from last
ago,
night.
the Fed announced that it has plans to do exactly that.
Yep.
Have
NASDAQ gets
all
closed.
of the answers over the giant banks. Chair Powell, why is the Fed about to propose a rule that directly contradicts your own testimony and in your own words would render the stress tests toothless?
Senator, in essence, because the ground has shifted very substantially in administrative law, and we actually want the stress test to remain resilient to that. And so we're making changes to accomplish that.
Well, the changes are changes you've identified earlier as making those tests toothless. Look, the big banks are going to juice shareholder payouts and leave this economy more vulnerable to a crash. The Fed is knuckling under to bank lobbyists. We know how this ends. People will suffer. Wall Street will get bailed out. I urge you, Chair Powell, to serve Main Street instead of Wall Street.
Thank you, Senator Rose. Thank you, Mr. Chairman. And Mr. Chairman, thank you for coming before the committee. I appreciate the opportunity to visit with you. And now scam individuals right now. Any change in the laws regarding how they're supposed to be treating the individual consumers out there or anything along that line?
Law changes? No, I'm not aware of any.
Do we still have
They'd have all the regulators except for the CFTC. If in fact, in the hypothetical, the CFTC weren't carrying it out.
anything else you'd like to add before we move on? Thank you, Mr. Chairman. As we continue to prioritize the stability and resilience of our financial system, the ongoing Basel III rulemaking process has remained front and center in shaping our regulatory framework. I guess I was rather outspoken with my opposition to the original proposal. Further work was stalled at the end of the last year. I guess my question for you today, sir, is could you provide an update on the Federal Reserve's progress in finalizing the Basel III endgame rulemaking process?
I'd be glad to. So we remain committed to completing Basel III endgame. We think it's good for U.S. banks. It's good for our economy that there be a global standard beneath which foreign banks can't fall. And that was one of the big ideas behind the whole Basel Committee approach. So where it sits now is we await leadership arriving at the OCC and the FDIC, and that seems to be happening. And when that happens, we're going to sit down with them and work our way through to a Basel III endgame proposal. I think we can do this reasonably quickly, one that is compliant and consistent with the Basel requirements and also consistent with what other large jurisdictions are doing. I'm optimistic that we can do that fairly quickly.
We always wanted our banks to be competitive with European banks. I'm just curious, the original proposal that was in front of you, and I'd like your thoughts on this, was estimated to increase our bank's capital by 19%, which I think may very well have created a potential disadvantage within the U.S. institutions versus our European counterparts. With any new proposal, what's your thoughts? Would you make a commitment that this would be a neutral approach with regard to capital?
The main commitment I'll make is we'll work together with new leadership at the other banking agencies to do something. But that's certainly, I've said many times in this committee that I think that the level of capital in the largest banks is about right, and so it'll shake out somewhere in that area. I would
Our
guess.
expectation would be, and the markets would expect that it would be neutral with regard to capital
in that range. But I want to defer to our new colleagues and get their views as well. But that's a good starting place.
Okay, thank you. The Federal Reserve's partnership with the U.S. Treasury plays a central role in supporting our nation's payment infrastructure, which processes a vast range of daily transactions, from federal benefit disbursements to debt obligations. Could you outline the Federal Reserve's role in supporting and managing the Treasury's payment systems, including how the Fed works to keep these systems secure, efficient, and capable of handling the government's high volume of daily transactions?
So it's a complicated set of arrangements, and I'll try to summarize quickly. Effectively, Congress authorized spending, and then the agencies carry out those spending orders. And the way they do that is they send an order to pay a payee or recipient to the Treasury Department. Upstream, before it gets to the Fed, all of these decisions are made about: is this an appropriate order? Is this payee on the don't pay list, and all those things. Once all of that is set, it comes to the Fed, and by that I mean 4 or so of the reserve banks, and we actually make a payment. We take the money out of the Treasury General account and we make the payment. We make no judgments whatsoever. Those are all made upstream from us, and we are in fact fiscal agent of the Treasury.
Confirm for me today, is the system safe today?
I believe it is, and I will tell you, we are very strongly committed to the integrity, efficacy, resilience, and all those things of this system. And people who depend on this in a big way. We're committed to that.
One last question for you, sir. The failure of Silicon Valley Bank, and the chairman brought this up. I'm just curious, recognizing a lot of banks out there look at this, it costs the other banks in the system a lot of money, pick up the costs involved in the losses. Nobody's been fired, but you did indicate that it was a failure in the playbook. Has the playbook been revised, or can we expect that it will be revised?
In a lot of ways, it's been revised, yes. I can go into some details here. One thing that didn't happen was, for example, the supervisors didn't follow through aggressively enough on things that they'd said. If they'd done that could well have been enough to stop it. Yeah. But a lot of it was just not focusing enough directly on what was a very large amount of interest rate risk, a large portfolio of long-term securities matched up with an unstable funding base. And somehow people wrote about that, not Fed, but others wrote publicly about this, but somehow we don't expect bank runs outside of a crisis in this country. And that's what that was. It was a bank run. And bank runs were incredibly damaging. I think everyone learned a lot from that and is determined to do better.
Thank you, Mr. Chairman. I think this is one that I think, as you appropriately pointed out, I think this is an area where a lot more questions are out there yet. And I think if it's the playbook that was the problem, I think perhaps a discussion about how that playbook has been revised would be appropriate in the future. Thank you, Mr. Chairman.
Thank you. Senator Cortez Masto.
Chairman Powell, thank you. And thank you always for the conversations in between these hearings as well. Let me focus on a couple of things of concern. And you touched on a little bit of this, and I think this is important to clarify. There was a change in the law when the CFTC was created. The CFTC examines the banks and enforces the law, whereas the Fed only supervises those banks. Is that correct? Or how would you determine that relationship?
With CFPB? So Dodd-Frank took a lot of the consumer compliance jurisdiction away from the other banking agencies and gave it to a newly created agency, the CFTC. We retained a residual amount of that, as we just discussed, which was banks under 10 billion in assets. But the CFPB essentially took all of that when Dodd-Frank came into being.
So as it was created, when you two were working together, the Federal Reserve collaborated with the Consumer Bureau when supervising those large banks, correct?
Yes, we still retain supervision over all the holding companies and also of Fed member banks.
And let me ask you this then, does the Federal Reserve enforce consumer protection laws now for things like money transfers?
Not for money.
That would be the consumer protection, that would be CFTC.
Yes.
Okay. And so when we're talking about collaborating with the CFPB for financial technology firms, what would the Fed Reserve now do that if the CFPB, if the hypothetical is the CFPB no longer exists, what would be the Fed's role right now with respect to technology firms?
We don't have jurisdiction over, we have jurisdiction over banks and some financial market utilities.
So let me ask you this, because I know there's a number of
point or not?
who file consumer
What is that?
reports of concerns
On
about
point or not?
competitors with the CFPB.
It's what on point?
The Fed Reserve doesn't receive those reports, correct?
No, I don't believe.
And you have no role when it comes to consumer
What you talking about?
protection, like the CFPB does, correct?
Unless you're a
What they say?
Fed member bank that has 10 billion.
Oh,
less.
yeah, I'm not even really listening. I was just about to say if someone else can share the sound, because I'm about to step away for a second, but I'll definitely be back. I'm gonna send you the link. If you can just put that up next to the chart.
Yeah, send it to me. Send it to me.
Yes, for all banks that we don't.
Yeah, I just posted it again.
And I think that's the concern we're all having right now, is this concern of when we're looking to streamline government. And listen, I'll be first to tell you, there's a lot of bloat.
like maybe just like
streamline
split the screen or something.
To address regulations and overreach, but there's a strategic way to do it, and not this burn down the house that is going to harm people across the country, including in my state, those Nevadans that are looking for some sort of enforcement around consumer protection law. So that's what you're hearing from many of us on our side of the aisle here.
Can I just very briefly add that we do have some residual enforcement authority, but what we don't have is examination authority, and for the banks of the CFPB.
Thank you. Let me ask you this, and we talked about this over the phone, and I understand it may be difficult to answer this, but the Federal Reserve Board members have been clear that future interest rate cuts are unlikely to happen despite the strong economy. But there are folks in my home that are in my state that are
Oh, I see.
to buy
You trying to split it?
And we know that's still an issue, the high prices right now for home affordability. You add the interest rates to it, it is a problem. So do you think it's most likely that interest rates will remain above 6% for this year, or can you even address that?
So overall, the economy is strong, growing 2.5% last year. The labor market is also very solid. Unemployment at 4%, quite a low level. Inflation last year was 2.6% for the year. So we're in a pretty good place with this economy. We want to make more progress on inflation, and we think our
you seen the link?
rate is in a good place, and we don't see any reason to be in a hurry to reduce it further. As
What'd you say, bro?
to housing,
Can you see
so
it?
there's a
Nah.
mortgage rates.
We can see your
Not.
Remain high.
I think it's how you're sharing Zoom. You don't want to share the application.
Oh,
you want to share the window itself, the window that it's in. How many screens you got?
There we go.
There you go. Yeah.
Are you good now?
Yeah.
They may remain.
And then you also
Okay.
got to share sound.
There's a.
Oh, okay. How do I do that?
So on the Zoom control bar.
Chairman Powell, thank you again for being here.
And even when it does happen.
Thank you,
Is it good
ma'am.
now?
Next will be Senator Kennedy.
Chairman Powell, thank you again.
Thank you,
Oh,
Mr.
yeah.
Chairman. Thank you, Mr. Chairman, for
Okay.
being
Perfect.
here.
Yep.
Okay, great. Yes, ma'am.
My friend, our ranking member, said
And then
that
also
we're
too,
knuckling under
Martin, on the
big
on
bank.
that share
Wow.
on the Zoom control
Is that true?
Mhm.
on the share.
No.
Not the green arrow, but the little caret to the right of it. Click that, and
It
then.
seems to me that the big picture should not go
But my fault.
There's the 3 dots on the Zoom control.
Do you recall
Click the 3 dots and do it like
a
share
year or two
video
ago
optimization.
when inflation was raging?
I think his
It was
audio's working.
by 9%.
What do you say?
I think his audio's working.
Yeah, no, it's not the audio. I'm talking about
Economists
the
and
video.
other experts.
Like, Martin, in that same area where you click the
Basic
share
part
audio,
on history.
there's a button that says like
Said that you were
share
going
for
to
video
have to
optimization. Click that too.
provoke high unemployment.
Okay. Optimize for
And
base video sharing.
put our country into recession
It doesn't let me click
in
it.
order to get inflation down.
No.
Do you recall
My
that?
fault. Try
Very,
now.
very well.
Not sure why.
Are we in a recession?
We are not.
Okay.
Would you, as an American,
Oh, there we go. Yeah, now.
trade places right now with
Perfect.
Germany in terms of the economy?
No, I sure wouldn't.
I'm about to hit target,
How about
y'all.
China?
Let's go.
No, wouldn't trade places.
How about France?
No, thanks.
Things aren't perfect. Inflation's obviously still sticky, and long rates are too high, which I want to talk about in a second. But the fact is, knock on wood, we have experienced a soft landing, haven't we?
Not for me to say, really. I'll let others
Well, have
make
we
that.
experienced a hard landing?
No, we sure
Are
haven't.
we in a recession?
No, we're not.
I call that a soft landing. And it seems to me that you and some of the ladies and gentlemen who are your colleagues at the Federal Reserve behind you deserve some credit for that.
Thank you.
I don't know why you don't take the credit. Everybody else in Washington, D.C. does. Again, I'm not saying things are perfect, but I never imagined that our landing could be this soft, albeit not perfect. And I wanted to thank you and your colleagues for that effort. You sure didn't get any help from Congress and on the and our president on the fiscal side. I don't expect you to comment on that. You and the Federal Reserve can to a large extent control short rates, can't you?
Yes.
Through the open market committee. You can't control long rates, though, can you?
No, we can't.
Why is that?
So a lot of things go into long rates, and one of them is the expected future short rate of Fed policy, but many, many other things go in. Expectations of inflation in the longer run, the sort of risks around the economy and around the budget deficit go into something called the term premium, which is the part we can't explain when we do these decompositions. And so, it's set by supply and demand in the bond market at the long end, and we're not particularly. We have some influence, but mostly not.
Many Americans are looking at short rates and looking at the Fed's behavior and how you reduce inflation, but they don't see the long rates going down, and obviously that affects mortgage rates. And I would encourage you and your colleagues to spend some time explaining to the American people why that is. Final question. If you went home tonight and Mayor Powell, your spouse, said, I got a call today from our bank, and they're debanking us. They're worried about their reputational risk because they don't like our politics. Would you think that fair?
No, I sure wouldn't. And as I mentioned earlier, I too am troubled by the quantity of these reports, and really want to understand better why this is happening. One theory is that banks are just very risk averse. around BSA and money laundering, and that's because we're so tough on them and that they just don't, any red flag is enough. But it may be that this whole thing with reputation risk needs to be thought about. It's actually coming out of our one manual that we use. We're taking that concept out, the manual that we've been using for account access, for master accounts. We're just going to take that out. But I think this needs a fresh look, and I think it's time for that, and we're going to do that.
Well, I've asked our chairman, and he has agreed to invite some of the CEOs of some of the banks that have been debanking people. The CEOs,
Yes.
not their lawyers, not their PR consultants,
Not the lobbyists.
not their priests, them, the CEOs to come in and let's talk about this and find out what the hell's been going on.
Thank you, Senator Kennedy.
Thank you, Mr. Chairman.
Senator Reed.
Thank you, Chairman Scott. Chairman Powell, welcome. Thank you very much. I think your monetary policy combined with the Biden fiscal policy over the last 4 years has made a tremendous difference. We've avoided a recession. And I'd like to remind people how far we've come. In 2020, the gross domestic product decreased 2.2%. The unemployment rate finished the year at 6.7%. By 2024, gross domestic product grew 2.5%. The unemployment rate was 4.1%. Labor force participation rate went up from 61% to 62.5%. And that's a combination of your work together with the fiscal policy of the Biden administration. So I thank you for that. One of the issues before us today is the issue of tariffs. In July 2018 testimony, you stated, Mr. Chairman, countries that have remained open to trade, that have not erected barriers, including tariffs, have grown faster and had higher incomes. Do you still believe that?
Yes, I do. I would stand by that.
So President Trump's tariffs on China, Canada, and Mexico will obviously raise costs on families. In fact, some economists, many economists, project about $1,200 per year households will be paying extra. An increase of inflation by nearly 1%, economic growth depression, and, for example, the increase of the average car price by $2,700. Is that a wise policy?
So I guess I ought to say this. I think the standard case for free trade and all that logically still makes sense. It didn't work that well when we have one very large country that doesn't really play by the rules. And in any case, it's not the Fed's job to make or comment on tariff policy. We, really, that's for elected people, and it's not for us to comment. Ours is to try to react to it in a thoughtful, sensible way and make monetary policy so that we can achieve our mandate.
Just this weekend, the president removed the board of the Kennedy Center and made himself chairman. What would you do if the president tried to remove a member of the Federal Reserve Board?
Well, it's pretty clearly not allowed under the law.
Thank you. We've communicated back and forth about synthetic risk transfer as a potential danger to the banking system. And could you give us some insights on how we can improve financial stability by regulating these transactions more appropriately?
So what we've been doing for some time now is looking at them on a case-by-case basis. And if they really do transfer risk successfully, then that's okay. I mean, it's a good thing if a bank wants to transfer risk off its balance sheet in a way that it gets compensated for and all that. But what you want to make sure is that the risk is really transferred, and that was the problem during the global financial crisis. Was sort of things that appeared to but did not accomplish a transfer of risk. So we see this coming, and we've been looking at these transactions on an ongoing basis.
Well, I commend you for that. In fact, what happens typically is the transaction becomes complicated by synthetic risk transfers, as it was the case with synthetic derivatives. So thank you for your attention to that. We've talked about housing. It's absolutely critical everywhere across the country. We're in a housing shortage. Of course, while housing is difficult, two of the mainstays of our housing market are Fannie Mae and Freddie Mac. helping to support home ownership. Does the federal guarantee backing Fannie and Freddie help make mortgage rates more affordable and home ownership more accessible, Mr. Chairman?
I imagine it does hold down mortgage rates, the fact that they're a sovereign risk.
And how important is the 30-year mortgage to ensure that families can afford a home?
In our housing market, the 30-year mortgage is very important.
Yeah. And I have heard some discussions about eliminating Fannie Mae and Freddie Mac, which would be detrimental, I presume, to the housing market.
That's really a question for you. You know, I mean, putting them back in the private, putting housing finance back in the private sector has some appeal over the longer run, but I leave that with you.
Thank you, Mr. Chairman, very much. Appreciate it.
Thank you. Senator Ricketts.
Well, thank you, Mr. Chairman and Ranking Member, for holding this important hearing, and thank you, Chairman Powell, for being here today to talk about our economy and all the things that are going on. I want to address, again, something that the Ranking Member started talking off about, which was characterizing the CFPB as being the cop on the beat here. But I can tell you, as having been a governor and having a Department of Banking that reported to me, that if any consumer would contact us and make a complaint about a bank, even a big bank like JP Morgan, we would investigate, as could the OCC, the FDIC, the FTC. So to characterize that nobody's out there looking for consumers, I think, is inaccurate. And we ought not to try and scare consumers right now that somehow this is the case, because if you do have an issue, if you're a consumer, please reach out to your State Department of Banking, because those folks are going to look out for you. I can tell you that because I used to have one of those Department of Bankings. They did a fantastic job of looking out for the consumers. One of the things that has also impacted consumers is inflation. Prices under the Biden administration were up 20%. An average household is paying $13,000 more today than they were for the same standard of living they had before Joe Biden got elected. We see that grocery prices, for example, are up 22%, rents up 23%. Simply put, Nebraskans are economically worse off today than they were 4 years ago, and I expect that that's part of the reason why we saw this change in the administration. They thought that that was not something that they wanted to continue to pursue. They didn't want the same policies being followed. We have to end the reckless federal spending, rein in inflation, and be responsible about how we make decisions to be able to grow the economy. One of those areas that I'm concerned about is the expansion of the Fed balance sheet. The Fed's balance sheet before, at the end of 2019, so before the pandemic, was about $4.1 trillion. By May of 2020, the Fed expanded that to $7 trillion, and by 2022, the Fed's balance sheet hit an all-time record of $8.9 trillion. Inflation peaked at 9.1% that year, a high we had not seen since 1981. Now, I'm encouraged by the actions the Fed has taken with quantitative tightening to shrink the balance sheet down to $6.85 trillion, but $6.85 trillion is still too high. And one of my concerns with this, Chairman, is that that's kind of one of your tools to be able to guard against a downturn in the economy or some sort of shock. You obviously used it during the pandemic. Looking ahead long term, will the Fed Reserve continue to this course of unwinding the balance sheet?
Yes, so what we said is that we intend to slow and then stop the decline when reserve balances are somewhat above the level that we judge consistent with so-called ample reserves. The most recent data and the feel of the markets is definitely that reserves are still abundant. They're about the level they were at when runoff started, because the runoff has really happened out of the overnight repo facility, reverse repo. So yes, it's an ongoing thing, and we're not yet where we're headed.
So what kind of pace can we expect? And I know that obviously there's going to be a lot of factors like what happens to the economy over the course of next year. But if things were going to go along the way they are today, you've already said the economy's doing well. Inflation's a little higher than we want it to be at 2.6%, but unemployment's at 4%. If these conditions, and I think you used the word stable quite a bit, if these conditions were to remain stable throughout the course of the year, would you have a range that you could give us of where the balance sheet might be if we were talking again here in January 2026?
We basically, we're going to be looking at reserve conditions in reserve markets, and trying to stop a little bit above what we consider ample. and we think we're, meaningfully above that now. We can't put a number on it because you can't directly know the demand for reserves other than by observing behavior in the market and then putting a little bit of a buffer on it. So I can't give you an exact number, but for now it's ongoing, and we have a ways to go.
What kind of conditions would have to happen for you to start going back to quantitative easing?
So go to quantitative easing. That's a tool we tend to use when we're at the effective lower bound and we can't cut interest rates anymore. So nothing like what you're seeing in the current day. It's a different test for stopping quantitative tightening, but we would use QE going forward only in a situation where rates are at zero, and we're a long way from zero now.
So that you think that, again, just generally speaking then, if things were to remain stable, you'll continue to unwind the balance sheet, you'll continue the quantitative tightening. Can't give me a range on this? Is that what I hear you saying?
That's right. That's right.
Okay, great. Well, I encourage you to keep doing that because, again, I think that's important to be able to make sure that you've got powder for the next issue that we may face. So thank you very much, Mr. Chairman. Appreciate you being here.
Senator Warner.
Thank you, Mr. Chairman. Chairman Powell, good to see you. One of the things we've talked about in the past, and I've got 2 or 3 issues I want to get through fairly quickly, is that that while our regulatory framework should always promote financial innovation, that innovation can't come at the expense of things like anti-money laundering, consumer protection, financial stability. I continue to worry in many of these hearings where we keep seeing this regulatory creep outside the boundaries of traditional financial regulation. I think if we were starting a system from scratch, few of us would design it this way. But it is one of the reasons why I'm looking forward to working with Chair Scott and my colleague, Senator Lummis, on a framework at looking at stablecoins in particular within the regulatory perimeter. I know my friend Bill Hagerty just introduced a bill in this area. I'm looking at trying to make sure we get those guardrails put in place, and how it touches the Fed is something that's terribly important to me. I know you and I have talked in the past about the notional idea of same activity, same regulation in the non-bank sector. If you'd like to wax briefly on this question around stablecoins and how we think about them in the same point of, if they are similar to other activities, should they not have the same regulatory structure?
So we definitely support these efforts to create a regulatory framework around stablecoins. Stablecoins may have a big future with consumers and businesses. We can't know that now, but it is important for the development of stablecoins in a safe and sound manner, and a manner that protects consumers and savers and all, that there be a regulatory framework. So we see these bills, and we're in contact as we were in the last Congress, and trying to add our technical thoughts and how to do this. And we think it's a very constructive exercise.
Well, we do think, you have a lot of expertise in this session, and there are people people come with lots of opinions on everything in crypto, from over the top to the other end of the spectrum. And I'm gonna need to rely on your expertise as well as we try to work through some framework for stable coins. I know there are a lot of earlier questions on CFPB. I think the record is pretty darn good. It's returned $20 billion to consumers. Matter of fact, the last time we had the previous chair here, Chair Rohit, Ms. Chopra, we were talking about $55 million to Virginians. I do have to mention this more for my colleagues. Tim Kaine and I did a teletown hall last night. Lots of things happening in Virginia. Normally, we would get maybe 3,000, 5,000, 6,000 folks on a teletown hall. We had 60,000 last night. I have not seen anything like that in my time up on here on the Hill, and a huge amount of concern about what the Doge boys are doing, whether our information is safe, whether privacy is protected. I had one lady say, in light of what was happening at CFPB, and while there's not a direct connection, she's saying, is her deposits at her bank safe? We tried to give her assurance, but I said, you know what, ma'am, I'm going to be talking to the chairman of the Federal Reserve tomorrow. And with this diminution or shuttering, at least at the time being, of the CFPB, can I tell, I believe her name was Mary, can I tell Mary from Virginia that her bank account is safe?
I think bank accounts overall across the economy are safe, yes. We've still got deposit insurance at the FDIC, and the banking system is well capitalized and safe.
Well, again, I think the concern was being raised was that the diminution of consumer protections lent her concerns about whether that dollar being safe. Last thing I want to recognize is that, there's been reports in the media about the thinness in the treasury markets, the number of additional bonding that we're going to have to do, particularly if with so many of these unpaid tax cuts. Matter of fact, one of the things that was really striking to me was that yesterday the president mentioned how he was, quote, examining treasury debt payments for possible fraud and suggested that our debt might not be as high as possible. We all understand the full faith and credit of the United States is based upon a reputation. If this president were to suddenly say, I'm wiping off X amount of debt because I don't believe we owe it, what kind of effect would that have on both stability of the dollar and the overstability of our economy?
It will probably not surprise you that I will defer to you on that question.
So you think it would be, from a Fed standpoint, the President of the United States starts to say we're not going to pay our Treasury debt, you're going to have no view at all?
I'm not going to comment on things that the president says.
I would like to see us at some point get a stronger answer on that, because I think that in light of the president's willingness to shut down agencies willy-nilly, his ability to potentially curtail payment of debt, I think would have devastating consequences on our economy. Thank you, Mr. Chairman.
Senator Britt.
Thank you, Mr. Chairman. Obviously, there's been a lot of conversation both in and out of this hearing room today. Conversations about a co-president referencing Elon Musk, referencing the work that Doge is doing. I think it's important to remember that President Trump ran on this. I mean, he said we're going to look for wasteful spending across our government. We're $36 trillion in debt, y'all. That's not only fiscally irresponsible, it is actually morally irresponsible. And the difference in this administration and the last administration is that President Trump is actually the final arbiter. And it's interesting that none of you had anything to say over the last 4 years when it is clear that our commander-in-chief was not in command. And if we're going to use the term co-president, then let's go back and say co-president Jake Sullivan, co-president Ron Klain, co-president Jill Biden. I mean, it seems that some of the biggest decisions were made during the president's afternoon nap time. And so I just think we need to be a little bit more honest about what's been laid out and what's actually occurring. Chair Powell, I want to discuss some monetary policy issues, but I first want to highlight a few supervisory items. We unfortunately started 2023 with several bank failures in which the Fed itself admits its supervisors were, quote, too slow to ask. The question has been asked earlier about who was fired, who was not. I think that there's some real merit to having accountability that we have not seen there. In the aftermath of those failures, the Fed was certainly not slow to act when it came to new regulations, like the new capital requirements that would have put the U.S. banks at a global disadvantage and actually hurt consumers in my state. The way I look at this is the world came up with a gold standard, and then Vice Chair Barr said, hold my beer. And unfortunately, that hurts Alabamians. In addition to that, we had Community Reinvestment Act and stress testing frameworks that were basically adopted in secret, or as we discussed last week, the reputational risk and just the arbitrary nature of that and those standards that were used to push political agendas. None of this is acceptable, and we've got to take a look at how to promote greater accountability and transparency into the Fed's supervisory function. Shifting gears, as of January 30th, the Federal Reserve had a mark-to-market loss on its balance sheet of roughly $221 billion. In fact, I looked back and the Fed has posted losses since September of 2022. Meanwhile, we've seen transfers to the CFPB totaling $2 billion since September of 2022. So just to clarify, Chair Powell, these money transfers are requested by the CFPB director each quarter and then directly deposited by the Fed. Is that how that works?
Y'all hear me?
So
Yes, sir.
Director of the CFPB
I'm about to
requests
call it a day, y'all.
under the law.
Yeah, bro, I didn't even take a trade.
So, yeah, in fact, but Dodd-Frank
didn't take
actually
a
prohibits
normal trade. I
the
just-
Fed from actually
What'd you say?
reviewing or amending those requests.
That's correct.
And so it
I
gives
just took
full
I
discretion.
just took a
to
couple
the
trades on
CFPB.
my live
To,
account.
I think 12%.
Not even PA, but like my live account.
Oh,
There's
nice.
a
And
ceiling
that
on
was it. I just went long.
So just
Caught a
to
couple
level
hundred
set,
and not even
how
trade
many
my
times,
my prop account.
has
So
the
I think I'm gonna call
CFPB
it
funding?
two.
Hey, man, that's good.
Yeah.
I
Yep.
trailed it live as much as I could.
Hey,
I feel you.
that was tight. I was seeing that. That was good.
But you see, my like that's what I was looking for. You know, like the entry, and then that push. But I tried to as much as I could. I was like, nah, I'm gonna hold. I'm not gonna hold because I was falling asleep. I'm not gonna lie.
Hey, that was called. You called it to a T, bro.
Hey, yeah, we
Yeah,
didn't reach
you
the
sure
high
did.
yet, but at least we have something for the YouTube, right?
Amen. Amen.
Yes, sir.
Hey,
All right, well,
go ahead.
oh yeah, what were you gonna say?
Oh, I was gonna say, I got some ideas. I'm gonna toss it to y'all. See what y'all think.
For sure, hell yeah.
All right, everybody.
Is everybody hopping off?
Well, I don't know. Y'all welcome to stay. I'm just me myself.
Yeah. Damn,
bro,
my fault. I'm over here talking shit.
bullshit.
Me
Mhm.
myself. I was close to target, so it's a good day. Early
Bro, up
day.
$100.
So, amen.
Oh my god. I'm on a 30-second chart and the price action is trash.
Hey,
I went live.
Auntie.
30-second chart.
Yeah.
It's
Mic
that
check. Mic
repeat?
check. Y'all can hear me?
Yeah.
Oh, okay. Yeah. No, it was my fault. I was saying I didn't trade any of my prop accounts, but I got a couple hundred on my live account, and
Nice.
I think I'm good for the day. I might come back in the afternoon just to see.
Yeah, I think the afternoon's gonna be nice, bro. Right now, it's too much. It's too much going on. And then and Trump is speaking too, right? Sometime after.
Oh, that's right.
He's speaking that too.
So yeah, afternoon should be a good time. I'm not gonna do nothing. Like I don't know. That's it. If you're gonna hop off, I'll hop off.
I'll still stay on if you I see the Senate thing's not on still. Okay. Cool.
Oh, I could put it back on if you want it, bro. Yeah, if you want it, if you want to, I'll put it back on. I took it out because I couldn't hear nobody.
All right.
Yeah, no,